Welcome back, traders and investors. We have Bob Lang on the line, and he's an equity and options trader and the founder of Explosive Options. Bob, how you doing this morning?
I'm doing great, Joel and Dennis. Thank you very much for having me on this morning. It's a great day to be here.
Okay. Before we get into our first topic, just a quick recap: your education and your market background.
Well, I'm a graduate of San Diego State University. I got my bachelor's degree over there. I'm an Aztec. I have my MBA. I'm mostly self-schooled in technical analysis. That's kind of been my trait over the last 12, 13 years, learning basically different techniques and indicators and so forth to find my option trades over past decade or so. It's been pretty successful.
Okay, and now just moving on to the recent volatility in the market. We had it on the downside, and then, boy, you blinked your eye. We're right back at all-time highs. Could you just put this volatility at, just in perspective here for our traders and investors?
Joel, it's been pretty amazing the amount of volatility that we've had over the last few weeks, and I got to tell you, on October 16th, if you were going to tell me that the S&P 500 was going to be up for the month of October, I'd have laughed in your face because we were down about 6.5% at that point. But we reached some pretty extreme sentiment levels at the middle of October. The put-call ratio was screaming higher. We had the VIX up near 31, which was a multi-year high. At that point, polls were extremely negative and bearish, and the oscillators, which I followed, the McClellan oscillators, were off the charts to the downside and staying there for quite some time. So the rubber band really was stretched around that time, October 16th, 17th. It seemed to me that the selling was just about exhausted around that point in time. We picked up some calls on the on around those days of Wednesday, Thursday of that week. Unfortunately, we got a nice double on those. Unfortunately, we didn't hold them long enough because they would have been about a 6 or 7 bagger.
Wow.
If you can imagine that on the spiders.
Yeah, when you're going bullish and everybody's bearish there, sometimes the contrarian play is the best play.
Absolutely true. I think that for me as an options trader, as an options player, I look at the technicals first, then I look at the options, and then I look at the technicals to help me get out of a trade. But as an options trader, I'm a momentum trader. Whether I'm buying puts or whether I'm buying calls, I want to see prices accelerate. I want to see some velocity. I want to see some speed. I want to see some of that action move either to the upside or the downside. It really doesn't matter to me. But when you've got a condition like we had in the middle of October, you really have to take note and understand that condition can't last for a heck of a lot longer, and you got to be ready for the market to turn around on a dime.
So were you just out there outright buying puts, or excuse me, in this instance, calls, or do you mess with call spreads at all, or what's your, obviously the flip side of that would be selling puts. What's your preferred method of attack?
Well, yeah, Joel, what I like in the service, what we do is we generally just buy puts and calls. We don't do spreads, but for the clients that I manage on the side, we'll do different strategies like selling premium. I love selling premium, especially in a market that like this. We're clearly been in a bull trend since for the last few years, right? Especially since the beginning of January 2012. So what I've been absolutely fairly successful doing is on these big spikes in volatility is selling premium when they hit some sort of zenith level, and then let it work for me as the volatility comes down. I mean, look, you can look at any chart of the VIX and you can see that when we've had these enormous spikes in volatility, it comes crashing down. I mean, literally overnight. In about 2, 3, 4 days, you'll see some of that volatility just get wiped out. And in fact, after we hit those extremes on October 16th, 17th, of around 30, 31, it only took about 5 or 6 days to eliminate about 40, 50% of that volatility. So we're right back down around 14% on the VIX.
So when you see those call premiums jacking up, then you just start licking your chops and start looking at them then.
You got it. And then there's one other indicator that I like to follow as well too. That really is my friend Steve Place calls the king of all charts, is the VIX VXV ratio, which is 30-day volatility divided by 90-day volatility. When that reaches over 1, that's somewhat of an unsustainable ratio. And, it actually stayed there for about 5-6 days. Usually it doesn't stay there for more than a day or two, but it stayed for 5 or 6 days, and it fueled this vicious 200 handle rally in the S&P 500 over the past couple of weeks. So, again, there was another condition that warranted getting bullish in the markets.
So Bob, where do you see the VIX going from here? We've went all the way up and we come all the way back down. Now we're looking at the VIX here at 14. Do you think like these Ebola fears, as they've subsided, do you see the VIX continuing to go lower? Or do you think new fears are going to come to the market, this volatility could spike up here again?
Well, Dennis, we have a confluence of events going on here, right? We have January, we have the best 6 months of the markets, historically, starting today, through the end of April, and we have a holiday seasonal time period where a lot of people are starting to put money to work into their funds. So that would be a positive. I would be cautious about volatility right now being so low. When volatility is low, it means option prices are cheap, and what we've noticed is over the past year or so, when option prices get this cheap, we see professional option players going out buying out of the money puts as protection. So what they're doing is they're buying, that's called the Skew Index, and what they're generally doing is they're buying puts that are out of the money, looking for things like a black swan event to happen or something like that. When option prices are really, really cheap, why not do that? And certainly this last move down, 9% off almost 10% off the high, paid off really nicely from the middle of September to in just literally 4 weeks. So to answer your question, I'd be cautious right here with the VIX where it is. I think we could stay down for a little bit, only because we're in that seasonal period where people are going to be looking for return. And in fact, hedge fund managers out there, most of them are behind the markets right now. Amazingly enough, the S&P up almost 10% this year. I think most of them are down, and they need to get some returns. So I think we'll see some good seasonal action to the end of the year.
Hey, Bob, we're getting some interaction. We're talking with Bob Lang here, and he's an equity options trader and founder of Explosive Options here on Benzinga's Pre-Market Prep, brought to you by Charles Schwab. And we're having some some discussion going back and forth here about volatility and selling. One of our traders says, hey, they like to sell spikes. They like to sell high volatility. And just one of our other traders is, wanted a full explanation. I know you've talked about it, but could you just break that down in the simplest terms and the pros and cons of it?
Absolutely. And what I like to do with options, as opposed to buying stocks, maybe stocks on margin or something like that, is I like to define my risk. All right, I like to understand how much money I can lose if I'm wrong. And being able to sell premium is a way for me to stay in a trade a little bit longer than I would have otherwise. I'm a swing trader, a momentum trader, position trader, whatever you want to call me, but I'm not a day trader. And there are conditions where a day trade is important when you. If you get into a trade that's you buy a call, it's $2 and it goes up to $4 in the middle of the day. Of course, you're going to take some of that off the table, if not all of it. So. But as a premium seller, what I'd like to do is I like to get into a situation when volatility is moving in a trending direction, and for the past couple of years, volatility has trended down, and as the markets become less correlated to stocks, we can talk about that as well too. But the point is that when volatility is trending down, the best strategy is to be selling put premium. I don't want to be naked on a put premium sell. So what I'll end up doing is I'll do a spread. Maybe I'll, for instance, like a Google, I might sell a 550 put, and I'll cover it by buying a 540 or maybe a 530 put. I'll take that premium in, and I'll wait until expiration and be able to take that premium in right away, and then maybe down the road either buy it back at a real cheap amount or just let it expire.
Okay, so we've had the great run here in the market, back up at all-time highs. The Japanese central bank really threw a curveball on Friday, and now we're up here, right at all-time highs. Quiet overnight session here. What are you looking at going forward? We do have some earnings coming out this week. We can discuss those, but Boy, I guess if you're just going with it doesn't pay really to fade the market at this point. Can we just be having like a day or two of consolidation before we make another move higher?
I'm right along with you, Joel. I think that's definitely in the cards here. Let's not forget we got a lot of starting Wednesday. It's all about jobs, 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 right? We got the ADP report.
Yep.
We got the non-farm payroll on Friday. I'm sure you talked about that earlier this morning. So along with the earnings going on right now, look, I mean, I think the most obvious move that people are looking at right now is that the market has to go down. But what do we know about the market? The market makes a fool out of everybody who's thinking we're going to go in one direction or the other, and we end up we think it's going to zig and the market's going to zag. So I think the most important thing is to pay attention to the market, don't listen to the noise, and really just go with the flow of things. I mean, look, I mean that's pretty much, if you were going to tell me after a 100 handle move that we're going to go up another 100 handles, I would have said you were crazy, but it happened.
Okay, so what's on your radar? We have some earnings this week. AIG, Disney. What are you looking at, and how are you positioning yourself?
Well, I've got a lot of names on my radar, about a dozen or so names. I'm not going to run through them all, obviously, because we're short on time. But I think Tesla's an important one this week. First Solar as well, too. I'm looking at, along with Disney, Priceline. Michael Kors has been one that has been on my radar for a while here. When it ran all the way down to 70. Now it's been up almost 10% over the past 3.5 weeks. TripAdvisor and then FireEye are a couple that I have on my radar screen, and then also Zillow is going to be interesting, and Skyworks, which has been one of the ones that we've been doing really well with lately.
So how are you approaching the FireEye? I just want to stop you on that one. This was one that's come back a long ways. It was at $35, had some resistance up there. It sold all the way up to $25, and now we're coming back and almost here at $35 again ahead of the report. How are you playing FireEye?
You nailed it, Dennis. That $35 level is going to be really, really stiff. I think that unless they come in with some firecracker numbers and beat estimates, it may be coming right back down again. So I'm if it gets over that $35 level on the after the report is up, then I think it's got free sailing back up to $42. But I'm probably not going to play it pre-earnings, which really doesn't bother me at all. I mean, look, we have earnings coming out with companies 4 times a year. You can't avoid that stuff. But I think I'm going to wait until after the earnings report to make a move on that one.
Do you like to play the weeklies at all, or do you like to give yourself a little bit more time?
The great thing about the weeklies, there, Joel, is that you don't have to deal with time decay. Basically, if you're looking for something on the charts like I am that's ready to make a big move technically, then the weekly options are a great vehicle to use. I'll give you an example. Last week on Wednesday, Thursday, Google actually had dropped down into the 550s. The weekly options had gone from about $2 to about 55 cents on Thursday, and by the end of the day, they closed about $2. They opened up on Friday at $8. So, nearly a 1,300% gain on that. Now, obviously, you might say that, well, that was a little bit of gambling going on there. You know what? I mean, I don't know if I'd like to think that, as we look at charts and technicals, we're given a little bit more credit than just being called gamblers, right? But I think that I like to use weekly options mostly as a selling tool. But if I see a strong momentum name that I really think is going to make a move in a couple of days, I'll certainly be a buyer of options.
Okay, so you mentioned technical analysis here, and that seems to be part of your strategies. What are you? Are you a candlestick? Are you a bar chart, oscillator, moving average? What's your preferred modes of technical analysis?
Joel, I use a lot of different combinations there. I use Bollinger Bands, moving average. The MACD is really the key that the one key that I look at, along with the percent R. Those are the tools that I use when I create charts and put them out there for Jim Cramer on his show of Mad Money on CNBC.
You do his charts?
I'm sorry?
You do Cramer's charts?
Once a month, Joel. I'm on there. I actually was on the show with him on August 4th as well too. So yeah, I mean, once a month. We actually did the charts for him on about 2 weeks ago on the entertainment segment. So
cool. All right.
So.
That wasn't you doing the charts on the cruise sector, was it?
No, that wasn't me. I did the most recent one was on with Time Warner, Disney, CBS, Viacom,
Oh,
Fox,
okay.
and Netflix. And
Okay.
so he was very interested in seeing that whole group, and we did a really nice analysis on that together.
Okay. Well, Ace is popping in here, and I don't know if you got caught up in this old GTAT thing. I mean, that really caught a lot of people by surprise. That wasn't. Was there anything in the charts warning you on that stock, or is that just something that's not on your radar?
Not really on my radar right now. I know that that thing got drilled. I think it was an Apple provider or something like that. GTAT, right? That's the one.
Yep.
GTAT. And once I guess Apple pulled the plug on them. It just went to the belly flop. So no, I mean it's not really anything on my radar right now.
Okay.
We're talking about Alibaba in the chat here a little bit. I want to get your thoughts on this too. I'm just looking this morning, and there's another huge buy imbalance this morning. There's 308,000 shares to buy. The stock's actually getting a pretty good lift here in the pre-market there. But this $100 level has been some pretty good resistance for Alibaba. Do you trade this one?
I love Baba. I'm long calls. I'm short puts and put spreads and everything like that. I'm all over the place on Baba. I think this is going to be a look. Here's the thing: is that this is the first earnings report this company has come out with, and also this is the first time as a public company they're going to be able to start having some sell through for the holidays. And I think right now that this company. And the investment community are in a spot similarly to where Google was when they first came out public 2004 in front of their first earnings report. I think really people don't have an advantage either way as to figuring out what their earnings are. I mean, everybody knows what their margins are like, what kind of sales they do, and so forth. I would highly think that they're not going to disappoint the street here. Are they up a little extended? Yeah, they're up 10, 12% over the last couple of weeks, but so are a lot of stocks. I just don't think that I think maybe up to 103, 104, Dennis, and that this thing could poop out. But I really do think that over the holidays, this is one you want to be holding.
What about Yahoo? Do you think you like Yahoo too because they have such a huge position in Alibaba? And we were talking back when this was 37 or 38, it seemed like they were almost pricing the Yahoo continuous operations at almost zero because if you looked at it, the amount of Baba stock they held was pretty much the market cap of Yahoo. Now it's come up almost 9-10 points from those lows. What do you think of Yahoo here?
I'm not a big fan of Yahoo only because if you're buying it for the Baba proxy, why not just buy Baba?
True enough.
I mean,
it's a good point.
Yahoo is just getting crushed left, right, and center by Google, and I think even Bing's numbers, which has been left for dead, which is Microsoft's search component, has actually ticked up some better numbers than Yahoo. I mean, Yahoo still hasn't recovered from the mid '90s when they went to the free model, and I think they have a really hard time monetizing what they're doing. And again, if you're buying Yahoo for Baba, just buy Baba.
Okay, and before we let you go here, Bob, is there any favorite books that you might recommend to people, for people just wanting to learn about options, and also some final tips?
Yeah, you know what? One of my favorite books is, and again, I'm a good friend of Larry McMillan, and McMillan on Options is certainly, if somebody wants to learn about options trading and the basics, there's no book that's more complete. It's been on my bookshelf for since the beginning. Since I started learning about options. So that one is one you want to do. And my most favorite entertaining book, if you want to talk about stocks in general, is Reminiscence of a Stock Operator, which is always a favorite.
Good one.